Oh yeah, another bank has fallen in the United States. This time the Silicon Valley Bank. Oh dear, we are on for a long run this time, like in 2008. The Silicon Valley Bank plays a central role in San Francisco's startup economy. You know, the one that censors everyone? You know them well. This bank was dedicated to being a lender for startups, not only in Silicon Valley but also in Great Britain. They were like a multinational company. Venture capitalists last week began advising their portfolio companies to diversify and move away from SVB. But why would they do such thing? It was a very powerful bank. There was a lot of money there. The money of Silicon Valley, you know. So amigos, hoy we are going to look forward to what is happening with the Silicon Valley Bank. I'm Sean Rico, I'm from Buenos Aires, and I hate the banking system. So, what we are seeing looks a lot like a classic bank run. No fractional reserve bank can withstand the bank run. So on last Friday, the California Department of Financial Protection and Innovation said it would close the bank. Oh no. The Federal Deposit Insurance Corporation said all insured depositors will have a full access to their insured deposits. Así es, hermano, we can't trust the government. So, according to Breitbart, this bank was a financier of Blackrock's progressive ESG policies. I don't know if you know about the ESG policies. If you don't know, how come you don't know? I bet you are always complaining about diversity and the woke question on Disney and another different shows like the Lord of the Rings show. That happens because of the ESG policies that the multinational Blackrock Corporation imposes on different companies. ESG is a woke standard. Every company has to have a department of climate change, diversity, minorities, and part of their investment must go to those categories. And that's obligatory if you want to have funds from these big corporations like BlackRock. But it's not all color de rosas. In short, ESG produces less, costs more, and it's obviously a fraud. By now, when a large ESG bank fails, we see the danger of systemic risk of the entire economy. And that's what happened when bank failures become dominoes, like in 1929. And so, just happened in March 7, Treasury Secretary Janet Yellen, you know, the one that said that she was going to work for youth, even though she's in the government since Jimmy Carter, but let's ignore that part. She was urging faster on ESG. A delayed and disorderly transition to a net zero economy can lead to shocks to the financial system. Oh god. VR Yellen, it's not like you are in the government for 50 years, you should know what is going to happen. I bet she knew, but she didn't want to talk to us peasants. So we have one of the points, which is that the bank made frightening investments in ESG, which gave almost no returns. And as always, this gives us a domino effect. After the collapse of the Silicon Valley Bank, then the First Republic Bank and the Signature Bank collapsed. At the opening of the Wall Street Square on Monday, the First Republic Bank suffered a violent shock market collapse of 68%, so the institution was forced to suspend its trading of securities in the market. On the other hand, the Signature Bank could not face the withdrawal of deposits in record time on Monday and was immediately closed and intervened by the financial regulator of New York. So, what are you telling me, amigo? Banks collapse if you try to take money out of the reserve system? Oh my god. That's shocking, but people still trust the banks. I think they are all completely locos. And what was the bank doing while the collapse was happening? They were promoting the liberal agenda and CRT around the world.
Not a great plan.
Fund manager Bill Ackman also mentions that, I quote, SVB senior management made a basic mistake. They invested short-term deposits in long-term fixed-rate assets. From then on, short-term rates rose and bank run ensued. Top management got it wrong and they should lose their jobs. End quote. But also, Ackman said the US authorities were also to blame for the bank's bankruptcy, and its job is to monitor the banking system for risks, and SVB should have been high on its watch list with over 200 billion in assets and 170 billion in deposits from commercial borrowers in the same industry. End quote. They knew this was going to happen, and look, Peter Thiel of PayPal and Palantir advised on Thursday night to withdraw all the money you had from SVB, so they knew. Also, Silicon Valley Bank pays employees bonuses before bankruptcy, so they knew. But taking account what Ackman said and Thiel's actions, this was a controlled and deliberate demolition. Then, mysteriously, HSBC bought the British subsidiary of Silicon Valley Bank for £1. Very barato. And then the three failed banks passed to the management of the Fed. And who runs the Fed nowadays? Blackrock. What a coincidence. We have to take account what the Bank of International Settlements of Switzerland said, that people shouldn't have their money in banks, but in the Fed. And this is what is being done. A transfer of people accounts to the Fed. This is going to sound loco, but it makes sense. If BlackRock is the one who runs ESG, then ESG also serves to destroy your company slowly, or the bank or wherever. ESG makes it obligatory to have a woke agenda, but the woke agenda doesn't give you a return of investments. Go woke, go broke, you know. So ESG is used to destroy you, and then BlackRock and the Fed takes your company. This is the horrible truth behind why the SVB collapsed. And then the Federal Deposit Insurance Corporation opened a headquarters in Santa Clara that would be responsible for returning the money. But where does that money come from? So there's money to save the banks, but not for East Palestine? Now let's see what this insider said that also shows that this was a controlled demolition. I quote, "There should be no doubt that the collapse of the Silicon Valley Bank was a direct result of the Fed's persistent and excessive interest rate hikes. Why? Because the Fed's war on inflation depressed both the value of the bonds of the SVB that relied on its capital and the value of the tech startups the bank served. Of course, SVB had more than a year to prepare for both problems, so the collapse was a direct result of the Fed's policies, and the Fed is run by BlackRock. So, again, we saw that BlackRock collapsed SVB on purpose. Maybe this is all going to be an excuse to implement the CBDC, so the government-backed digital currency. They are going to start blaming that people are using banking apps to take out their money. They are going to implement the CBDC to make you have a virtual wallet, and they will authorize if you can take your money out or not. Also, JP Morgan wants to buy part of the SVB, and JP Morgan was one of the companies that gave Elon Musk the money to buy Twitter, and what a coincidence that Musk and Peter Thiel are partners from many years ago. Were all of them in this together? Well, I don't know for sure, but you can leave that in the comments, and I'm going to see you, amigos, in the next banking collapse. Saludos.